Guys, Joel Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a look across markets. I'm going to be giving you a quick update, and we're going to be talking about some of the big events that are coming up this week and how things could potentially play out in markets. So let's jump straight into the charts here. I want to start off by talking about currency markets because last Friday, the US dollar index actually recorded, I think it was its biggest one-day decline, a 1.8% drop that you can see here on the chart. Its biggest decline since, I think, March 2020. So what's going on there? Well, I mean, there was a couple of things that happened really. So just to kind of recap last week, we had the Fed meeting on Wednesday, 75 basis point rate hike as expected. Hawkish Fed Chair Powell, a hawkish tone from Fed Chair Jerome Powell in the post-meeting press conference, where he was talking about how basically it's way too premature to be talking about the Fed pausing interest rate hikes just yet. And he was talking about potentially a higher terminal interest Fed interest rate and holding those rates higher for longer, which is kind of like how he sounded for a while now. But then on Friday, we had US jobs data, which was mixed. In fact, if I just go back on the calendar here, I can show you how it went down. So the unemployment rate unexpectedly rose to 3.7%, as opposed to the expected rise to 3.6% from 3.5%. So, and the survey, which they get this unemployment rate data from, showed a drop in employment in the US. Now that sort of goes against the separate survey which they conduct to get the official NFP number, which was stronger than expected, and then also you had hotter than expected average hourly earnings growth in the US. So it was a mixed report, but anyway, people seem to be sort of clinging onto that rise in the unemployment. But then you also had a bunch of other Fed speakers coming out on Friday and talking about how they sort of generally supported the idea of slower rate hikes ahead. So that potentially weighing on the dollar as well, potentially still weighing on the dollar this morning. There's also speculation still going around about China sort of backing off a little bit from the strictness of its zero COVID policies, which would be good news for global growth, good news for the Chinese economy, which eases some of that safe haven demand potentially for the US dollar. It's kind of just speculation mainly for now. Like I think the Chinese officials that came out this weekend weren't really talking about how they're going to back away from zero COVID. But anyway, we're still seeing this downside a little bit extended in the dollar this morning. We've got plenty more Fed speakers coming up this week. We've got the US midterm elections, which should see the Republicans gaining substantial seats and control in Congress. I mean, we're potentially going to see the Republicans gaining control of both chambers, which should kind of mean that the second half of Biden's term in the White House, he won't be able to implement his agenda really, because the Republicans will be blocking it and they'll be trying to get their stuff through, and Biden will be blocking it. But the main thing we got this week, let me just return to the calendar, is US CPI data on Thursday. It's pretty quiet up until then, as you can see, like not really anything on Monday, not really anything on Tuesday apart from the elections. Wednesday, it's like empty. Yeah, but yes, CPI data on Thursday. We're expecting the headline to drop to 8% from 8.2%. We're expecting a slight moderation in the month-over-month rate of core price gains, which is actually this core CPI data is the most important thing at the moment. So yeah, that's what we'll be looking at. If that comes in softer than expected, then you could potentially see this recent downside in the dollar continue. Let's just show you some technicals with the Dixie here, which are quite bearish, I think. So you had this uptrend, you had a break, we had the retest, and coupled with some of those fundamentals that I was talking about, aggressive selling. So there's the potential, if we do get slightly softer than expected US inflation data later this week, which is a big if, and if the Fed speakers that we have coming out this week, it's not just Waller on Thursday and Mester and George on Thursday. I think there's actually quite a few more speaking this week. If they sound dovish like the ones on Friday did, then there's potentially room for a break below this recent low, I would think, and potentially the room for a test of these recent lows. But we're talking some big ifs here, so we're going to have to be monitoring how things play out. Um, in terms of what else is important on the calendar this week, just sticking with the US for now, this preliminary University of Michigan consumer sentiment data for November is always watched, but the most closely followed thing at the moment in this data is the inflation expectations aspect of it. Obviously, with inflation being so important, which is why the CPI is the main thing of the week. But yeah, we want to see that inflation expectations are re-anchoring, and signs that they are re-anchoring is what the Fed wants to see to sort of ease their fears, and reduce the need for like aggressive rate hikes. But anyway, let's get back to the charts and let me show you a couple of other asset classes as well, because it's not just currencies. You can see the S&P 500 had its big sell-off last week on Fed Day, but it's regaining some composure as the dollar comes under pressure. Just looking here at US yields, they've kind of stabilized below recent highs, setting the stage for a bit of a recovery this week. Of course, it's all going to be down to US inflation data, though. And just interestingly, from a technical standpoint, got this downtrend that we're in. Interesting to see whether we could maybe get back above that 50-day moving average, and challenge those recent highs once again, which could potentially represent a bit of a technical bullish breakout. Obviously, that would depend on FOMC members kind of being interpreted as dovish, and in the inflation data not being as bad as expected, the election result going as expected, no big surprises. I mean, I think actually if the Democrats did better than expected, that could be bad for markets, because the Democrats potentially in investors' minds associated with higher spending, higher government spending, which could worsen the inflation problem and put more pressure on the Fed to be more hawkish. So I think that's kind of the thinking. Markets maybe wanting to see the Republicans win, basically. Um, Other asset classes, let's just take a quick look at oil. Oil, loving life last Friday amid all that speculation about China potentially easing its COVID restrictions. We've been talking about this. I had been talking about this downtrend that we'd been sort of in for a while. Well, looks like we're kind of breaking above that now, and arguably in a bit of an uptrend. In fact, I don't like that trend line. We can delete that. Arguably in a bit of an uptrend now. We're substantially above the 50 and 21-day moving averages. Not looking like we're anywhere near being overbought, which is all good for the bulls that might want to push us higher if they think that China's reopening. But we do have some resistance here in the form of these recent highs. Remains to be seen, with the worsening global growth backdrop, which is still very much the case, whether we can get into the upper 90s and have another go at 100, which we've been struggling with in oil for the last couple of months. But yeah, just one final look at the calendar. Do we have anything of note from the rest of the world? I mean, you could say UK GDP data, UK economy sort of pretty much already in recession. This data is expected to show that. And then out of the rest of the world, it's a bit of central bank speak, but mostly the focus is on that US inflation data. So yeah, guys, hope you enjoyed the video. Hope you found it informative, and I will see you all in the next one.